We are back for a huge week in the markets. We got Joe Biden dropping out of the race, Donald Trump at the Bitcoin conference. What's Kamala Harris going to do, and how is that going to impact the markets? Earnings are coming in. The last PCE reading before the next Fed meeting. So much going on this week. We're going to be looking ahead to all of that and somehow more today on Money Never Sleeps. Thanks for joining us today, everybody. As we get going, do us a favor, like, subscribe. Remember, nothing that we say is financial advice, so please do your own research, yada, yada, yada. Kevin, haven't seen you in a week or so. It's been crazy. We got the news yesterday, right around this time, 24 hours ago, just a little bit over, Joe Biden dropping out of the race, how that's going to impact the markets. He's endorsing Kamala. He's, basically a lame duck at this point for all intents and purposes. It's been a weird day since then. We saw a drop in crypto right after that was announced. Then it popped back up. We saw equities open significantly higher, especially on the NASDAQ. Those are still doing well. Trump is going to be talking at the Bitcoin conference. What's that going to do to the markets? We got GDP data, we got housing data, we got inflation on Friday. Meanwhile, tech earnings are kicking off with Tesla, Microsoft, Google, a bunch of others. I mean, it is a hell of a week in the markets, and it's time to lock in, buddy. You're on mute, by the way. I talked for so long that you were still on mute.
I knew that was going to come up at some point, but let it pump, I guess. Not financial advice. But this has been once again.
And the CrowdStrike situation that
that's what I was going to bring up right now.
That happened, yeah.
I'm just going to share my screen because I don't think there's any other better way to say this. I think a lot of people are saying that it's a glitch or it's just something that they messed up on. Then explain this. CrowdStrike Insider Trading Alert. CrowdStrike's chief security officer, Sean Henry, sold $1.485 million worth of Crowd shares on Monday. This is from July 19th. So he front ran the little debacle that landed CrowdStrike down 25%, I believe, that day on Friday. So, this is not a time for technical trading, in my opinion. I mean, there is definitely technical trades out there, but this is definitely a narrative-driven market right now. And you kind of have to play, and this is what's going to really separate good investors from great investors, is knowing how to play the narrative as well as the technicals and seeing where money's flowing, because you're going to get psyched out a billion times between now and November, in my opinion. I think that's how the markets are just going to play. Friday was OPEX, and we saw pretty much 3 days straight of red in major equities just going down into it. So people were taking profit that had those, those contracts that were a little bit lower. Now we're getting the OPEX bounce because OPEX is over, but there are major things that I'm very concerned with, especially on the 4-hourly charts, that say that maybe we're not out of the woods quite yet, and maybe volatility is going to pick up pretty soon. I'm really excited for this week because there's a lot of data going on, but then there's also a lot of speculation that's going on too around political uncertainty. That's not a good thing. Finding out that Biden is not running for an election again, for a re-election, now we don't have an incumbent president that's going to be running for office. What does that mean? Well, last 2 times we had major crashes, other than 2020, we had 2008 and 2000 when there was no incumbent president. And that was when the economy looked like it was absolutely barring chaos, right?
Yeah,
2020.
But I don't think that had anything to do with not having an incumbent president.
No, but I'm just saying there's corrections in markets, and there's corrections in markets when there's no incumbent president. And those are the ones that have significantly the largest level. So usually you get a bit of a retracement going into an election year with an incumbent. It's nothing. It's like 5 to 10% at the worst. When you don't have an incumbent president, the odds of that increase significantly. Because again, it's pretty much a clean house that's coming in. So it's going to be really interesting to see where we stand in November to March of next year. If we do have that type of retracement, it's like, is it going to be 10%? Is it going to be 5%? Or is it going to be something significant to like 30 to 40 or even higher? So I'm really excited by this, and maybe I'm talking too much now, but I think there's a lot of things now that are at play that are just going to make the next 90 days to even to the election just absolutely fucking crazy. I'm excited.
Yeah, it's really weird trying to like parse through all of this, right? Like it seems likely that Harris is going to be the Democratic nominee, but
I
that,
disagree.
that could change. Okay. Curious who you think it's going to be, but there's that uncertainty right there. There's uncertainty on, hey, if Trump wins, what the hell is this guy going to do? He's a wild card. We saw all sorts of crazy stuff in the markets during his first term, right? Like he would tweet something and it would cause the markets to drop 1,000 points. Like
Yep.
he's already talking about, when it comes to, are we in the midst of an AI bubble? Maybe, but he's talking about semiconductors and chips and trying to bring more of that back to the United States, imposing higher tariffs on other countries. Well, that doesn't help inflation. So there's all sorts of things at play here, and it absolutely can and will lead to more volatility in, I would say, the next 6 months, right? Like it
Absolutely.
be a very volatile remainder of this year leading up to and through the election. So I'm curious who you think the Dems are going to end up nominating when all is said and done.
I don't think it's anyone that's in office right now. I'll just say that.
Okay.
But I will say this too.
Have you bet on it on Polymarket?
No, I'm again. I'm so apolitical to the point where I just don't care really what happens here. I'm here for the ride. Let's put it that way. I think that the markets are going to be the one that's going to be more important to watch. But I definitely think that there's a good chance that come August 24th, I think that's the day of the DNC convention, we have very different candidates that are going against Trump. Right now, I think Trump wants to go against Kamala Harris. I think she's kind of a filler for the time being for who's going to go, because obviously Joe refused to step down for the longest time, and then out of nowhere we get this random tweet and radio silence on that front. Still waiting to see what an actual video or anything like that to say that he's stepping out, but I don't know. I don't know. Maybe this is such a wild time that literally all bets are off, and this is just a free for all, in my opinion. Like the past 3 weeks have just been chaotic. We had an assassination attempt. We have a president that just wouldn't step down, and then one day out of nowhere they stepped down amidst COVID. Now we got Kamala Harris, who Trump wants to go against. The Trump campaign said that this is like the ideal candidate for him. This is gonna be crazy. I mean, let's put it this way: I wouldn't even be surprised if Kamala Harris ends up becoming the president for a few weeks. Right? It's absolutely chaos right now. Right? If you're stepping down because you're not like physically fit or mentally capable of running for office one more time, well, people are probably going to question, are you capable of doing that now? So there's a lot to be really questioning right here, and this is going to cause pretty much turmoil for the markets, because even if they think right now that Trump's going to win, maybe that's a bit of the reason why the markets are bouncing here, because they think he'll pretty much beat Kamala Harris. What happens if she ends up not being the nominee and ends up being someone else who's going in a different direction than Trump, but has way more, likability? It's going to be absolutely chaotic. I'm, like I said, I'm a watcher here. I'm watching the markets and I'm seeing what some of these people are doing. Like this person from CrowdStrike, Jensen Huang, who are selling shares, gives me the inclination that we're probably going to see volatility spike in the next 3 to 6 months. Again, just being an election year too.
All right, let's kind of look at the week ahead and what has our attention. So there's no data that came out today. Tomorrow we get existing home sales. As someone who is very interested in the real estate market, that is going to be a number I want to watch. We also will get services and manufacturing PMIs. On Wednesday, we get new home sale data. On Thursday, we get the first Q2 GDP reading. Expectation is 1.9%. Maybe we start to see that things aren't quite as strong as we have been led to believe. Some other data that day as well, but less significant. And then on Friday, we have the big one: personal income, personal spending, PCE, year over year core, all that good stuff. And that is leading into the last day of the month on the 31st, where it's going to be the next Fed meeting. And they're going to have a lot to go. Like, I think that's going to be, as we get closer and closer to potential rate cuts, everything that they say is going to be put under a microscope. So Powell's going to, he's going to be walking on eggshells in that one, I think. What is kind of your main focus there? Or do we want to look at like we got a lot of earnings this week as well. Let me kind of run through some big ones real quick. Google, Tesla, Visa, Moet Hennessy, Coca-Cola. We have, those are some of the bigger ones. Verizon, Philip Morris. We have some of, quite a few this week. Those are the bigger ones that the market's really going to get moved on. Are we going to see with Tesla that sales continue to be as strong? Are recalls hurting them? With Google, how is ad revenue? Are businesses still spending on ad revenue through Google? They obviously are, but to what extent? And then with consumer goods like Coca-Cola, what is the consumer looking like these days? It's pretty weak, is my assumption there, but that remains to be seen. So what are kind of all the things I just rattled off, what do you feel like is going to move the markets the most?
Yeah, none of that. Granted, I think it's gonna be news that's gonna move the markets right here. I think it's just maybe it's coincidentally times that comes out similar days as some of the important data. GDP obviously is going to be a good one to look at. Forecasting out how the U.S. economy has been performing for the past few months. Is that going to pretty much tell us that maybe we're slowing down to a point where we might be getting into recessionary territory? It's going to be one that we're going to want to watch. I think PCE is going to be really important. It's going to forecast everything for the rate cuts and into September, which I think we can all agree on. Probably going to get the first rate cut in September. Seems like that's the way the markets are heading towards. But that's also going to impact the treasury market, right? So the PCE data is going to impact how much money flows into the treasury market or how the yield curve reacts. So that's going to be very important to see. Earnings are important too. Like this is all stuff that's really very much packed in this week because we know that tech is very much frothy in the entire equities in the indexes, from the S&P to the NASDAQ. We also know that tech failed on Friday because of CrowdStrike. So now the dangerous thing is if tech fails again, what's going to bring down the market? It could be tech, right? So it's a very scary scenario. And if we start to see that the earnings are not coming in, they're maybe not hitting the earnings that they're expected. Maybe they beat on earnings, but they miss on expectations, right? They did better than the previous quarter. You can still see tech dump hard. It's very possible. But I think that we're in a really weird situation. We can look at the stocks in a few minutes, but I think it's going to be a mixture of both the narrative and it's going to be a mixture of the data. I mean, if the data is bad and then the narrative comes, that's something that shocks the market, surprisingly, well, then that's probably not going to be a good thing. Not a good day for the markets. You're probably going to see a little bit of red there. But for the time being, right now, I think people are just speculating that things are going to go up from here. And even if they do get that PC and it looks cooler, maybe they speculate higher on that, and then retail is kind of getting trapped amidst the slowing economy. So this is I mean, that didn't really answer anything, but pretty much what I'm saying is it's all very important. I think that the earnings are going to be more so important to see how these companies, if we want to see the indexes move, it's going to be tech and earnings. If we want to see, the treasury market, it's going to be the PCE and the GDP data.
All right, let's pull up some of these charts, take a look at what is going on in the markets. The NASDAQ rebounding in a big way, up 1.6%.
Ooh, let's pull that one up right now.
47 minutes left in the trading day. So good recovery there after last week was ugly for the NASDAQ. Every day it was red. So pretty ugly week there.
Do you see it?
Yes, I can.
Do you see what I see though? We're in it's a very weird position right now for the NASDAQ and the S&P. I'm not scared, but it's very scary if you're a retail investor and you bought somewhere up here, right? I'm just going to draw it out. I mean, we could be looking at something as big as this. Here's a rebound. Something like that. We could be looking at something as simple as this. We could be looking at a lot of things, but the problem is you're not seeing this. I have no reason to believe that that's what we're going to see, or something like this. Right now, I do believe with everything that's going on in the indexes and in tradfi, and eventually crypto will get there too, but we are in corrective territory for the NASDAQ and the S&P. You're very close to all-time highs, right? We've had some bad days in the past, but when I look at these on the 4 hourlies, the 4 hourlies are very scary. What I'm seeing here more than anything is we had our wave one, or wave two, or massive wave three that brought us down, and right now we're at a wave four. So what I would assume is that in the next few trading days, as we get more candles on the 4 hourly, the stochastic resets up here, and we don't go higher than 20,160 for the Nasdaq, we probably got another drop coming on the 4 hourly chart. And where could we be looking at that? Given where the 4 hourly is, we could be looking at 19,365, which from where we currently are, that's about 2.5%. It's almost 500 point drop. We put in about 615 if we want to fill that gap entirely, or if we want to go all the way down to the 200 moving average, that's about a 5.5% drop in the market, and that's about 1,100 points that we drop in the Nasdaq. And then obviously we have to look at the structure. Then was that our wave three of something larger, or is that just the wave one of something even larger? It's just the way that everything is set up in these charts. There's not one bullish indication that we continue to move up from here. And again, I'm going to pull up the Nasdaq on the monthly real quick, just so everyone takes a look at this. You had a massive wick all the way up that just got absolutely retraced down. That's a pretty bad inverted hammer. I want to see what the months following that are going to look like, because when you see something like that, that tells you that, all right, we hit the top. There was a lot of profit taken up there. It's going to be harder to push the price up to some of those levels. So, and again, I'm looking at this in terms of, months, weeks to months here. I think that the Nasdaq has definitely topped, and I do think that the S&P has. I will say the S&P possibly has topped, but right now in tech and in the S&P, since those are, the Nasdaq and the S&P, since they're so heavily tech, we're looking at major corrections, over the course of the macro. We're looking at this on the S&P. It's very similar to what we just saw in the Nasdaq or the 4 hourly. You had wave one, wave two, wave three. As long as this doesn't go above around 55.82, there's a good chance that we have another wave, or wave five brings us down a little bit lower. Again, if it's a massive dump because something happens in the news that the markets didn't expect, or the data is bad, you're looking at maybe about a 3.5% drop down to 53.79. And then from this whole move from the top of where the S&P went to and where it retraced, we're looking at a little bit north of 5% on that. Look at the monthly real quick too. Not nearly as bad. We still have some time left in this month. If the S&P does get hit a little bit more, we could see something very similar to the Nasdaq's inverted candle. So across the board, the indexes look pretty shitty. I want to see how some of these other stocks look themselves. So do you have any stocks that we should maybe take a look at that you think are worth looking at right now? Because indexes are telling me the same thing for the short term, or medium term, I would say.
No, it's the usual culprits, right? Like Nvidia's having a strong rebound today. Tesla, looks like people are getting excited about earnings after close tomorrow. That's up 5% on the day. Those are the main things. We're seeing the VIX unwind a bit, down 10% on that number today. I don't know if this was like a glitch or something, but it's showing like it went down to almost 10 the other day. But we're seeing a big move down there. The Dow still staying strong above 40K. So no real individual stocks getting my attention at the moment, besides just watching CrowdStrike get absolutely obliterated over the last few days. Good Lord.
Yeah, I just have NVIDIA pulled up. I'll look up CrowdStrike real quick. And again, we're just following NVIDIA because this one has been trading technically. NVIDIA can go to about 126.9, 127, maybe flat. If it goes above that, then this is invalidated, and we're not looking for another fifth wave drop. But as of right now, before we're looking at NVIDIA, it's going to consolidate. Let me pull up the 4 hourly because it's better. It's easier to see. We're getting our little corrective wave here, and I think is our wave four. Once that gets topped out, finding resistance right now on the 4 hourly 50 moving average, by the way. I do think they were coming down lower than what this is, 116.61. We probably putting in something closer to, it could just be something like 115.55. Could be a lot more sinister. Honestly, I've had this circled right here for about 3 weeks now that we go to like 107. From current levels, that'd be about a 13.5% drop in NVIDIA. Think about how that impacts, the S&P and the Nasdaq. Kind of lines up with, maybe that last fifth wave drop of this first initial move in this corrective pattern. So just something to keep in mind. Again, double top. I said it's been trading technically. Very interested to see how this plays out. But goes worse than that, then we just got the 200 moving average on the 4 hourly, but on the daily, it looks like the 200 is further below. So you're gonna have to find some support somewhere in here if it were to lose this 107 level. Not a lot of support in here, guys. Like from 107 down to 96 or so. That's a big drop if these two little candles that are right here don't hold as support. So keep an eye on that. Stay vigilant on that. Let's look at CrowdStrike holdings. Damn, I haven't even looked at this chart. That's terrible.
Yeah, that's. Whew,
but here's the thing. Tough. This is very similar to what we're kind of expecting. We say that there's not going to be a slow bleed out. It's going to be one flash crash, right? And that's kind of what a chart that we expect a flash crash to look like. People are just trying to get out because, hey, we want no association with this. That was a bad look on Friday. What happens if something like that were to happen again? And CrowdStrike, I mean, even if it wasn't CrowdStrike's fault, maybe it was some different type of software company has some type of technical issue that impacts, the greater operating world. Well, then CrowdStrike's still going to get dumped on because guess what? They got screwed last time. No one's going to want to hold them. So what we're waiting for here, and I'm joking, is Jim Cramer to say that he's bullish on CrowdStrike once again. That's what we're going to wait for. And if that's the case, then I'm still going to stay away from CrowdStrike because I don't take Jim's approval serious by any means. Well, you're gone. We did get some really wild stuff in the banking sector. Let's pull up Schwab. Schwab had a very similar few days like that. I don't know if you were keeping an eye on it, but it got decimated from $76 in a matter of like 4 trading days. It went as low as $61. Let's see. So that's a massive wave 3 that it put down, dropped about 20%. But this is a bank that you and I have talked about for the longest. I've said that Schwab messed up and they bought tons of long-term treasury bills at like less than 1% or maybe even less during 2020, 2021. And guess what? Now those are continuing to be printing zero negative money and they have to offload and they probably have a lot of exposure. Again, it was their fault for becoming a bank and using that money. I mean, pretty much a custodial bank and using that money to buy treasuries. Now they kind of have to pay for what they did. And the market's kind of punishing them for it. Interesting thing is, what happens if this is very similar to what we're seeing in the other market? We're waiting for our fourth wave that we're putting in, wave 1, wave 2, wave 3. We get a little bit of a wave 4 bounce here. Maybe it hits the top of this little rejection trend line that we've had for a while at 65.83. And then what happens if it just, comes down to the bottom of 54.17? It's very possible. And I think this is saying something bigger and broader about the state of the banking sector. We saw a lot of banking data that came out last week with earnings, regional banks. We saw Wells Fargo not necessarily in the best place. Bank of America hasn't had a bad trading day, but for some reason we continue to see that they're having problems with keeping customer deposits in their banking system. So I think that's this lie that we were told about it's just the regional banks is something that we've discussed, and it's actually no, it's about the banks who had just bad debt. They couldn't get off, and they had to hold the debt to maturity, and it's just printing losses for all of them. Schwab is at the top of that list. We were talking about it. They were the number one who had the highest percentage of FHLB loans operating as equity, and we said that they were no different than what happened with First Republic, Silicon Valley. Was it Silicon Valley Bank? Yeah, SVB, and what's the other one that went down? First Republic, so Signature. All three of those plus
like PacWest as well.
PacWest was one of them too. Yeah, but they were a little bit smaller than I think the other ones in terms of their FHLB, but still extremely high. Schwab for sure though was on the top of that list from what we saw after those three banks failed. So I wouldn't be surprised to see a lot of volatility regarding Schwab in terms of their equity price in the near future. But outside of that, nothing too crazy that I've been watching. I mean, obviously Japan's having a bad time with the Nikkei, right? Yen's getting stronger, so the equity markets are selling off. I mean, since the yen reversal, it's down about almost 7% or so. It's at the 50 moving average. So there's a lot of things going on in the world. It seems like central banks are finally starting to move on things, and if that's the case, then equity prices are probably going to flow into treasuries to save some of those markets, those global economies. And we look at even the U.S. real quick before we head into crypto. Wrap it up. Where are we? Where are my treasury bills? I am missing my treasury bills. Where are they? Here they are. The yield curve is going back. It's going to uninvert fairly soon. We already see it. It's at negative 0.24%. It broke this trend line that it was trading underneath. I mean, that's a good sign that we're probably going to see rates come down in the near future. But and even in this channel, this is a bullish, I guess, a bull. I would say bull pennant. It's a triangular one. It's just coiling up in here. You're going to see this revert. So it's going to uninvert and be back to normal. It's going to be positive, the 10 to 2 year. And we're going to see that price reflected in the treasury market. That's going to mean that we're probably going to see a lot of money flow into treasuries, knowing that, hey, maybe the rate cycle is over. We're going to cut rates. And at that point, maybe we see that pullback with equities. It's all kind of lining up towards that September, October area. So also with the VIX, tons of things that are just correlating in this market. It's music to my ears.
All right, let's get into crypto next. I know you and I are on opposite sides of the market as of right now, and probably will be for a while. So we have the ETH spot ETF that I believe is launching tomorrow.
Yep.
And later this week, we have Trump speaking at the Bitcoin conference in Nashville. I know a lot of excitement around that. Cynthia Lummis, I believe senator from Wyoming, had a tweet about that today as far as some big things coming. The speculation, and it's purely, it's not founded on anything. It's just people want this to be the case, is that he's going to announce Bitcoin as a reserve asset for the United States. I'm not expecting that to happen by any stretch of the imagination. And if you're buying Bitcoin this week for a short-term trade based off of that, may not be the best idea. I don't know, but that is kind of the hope there. I guess where I stand with the market is I've for a while not believed that this is kind of a retail-driven rally. I still very much think that that's going to come later, maybe later next year or in 2026. But I view the coming months as institutions positioning themselves so they can then dump on retail once retail's in a better financial situation in a few years, once interest rates are lower. So I still believe that we're going to see, there's a ton of money sidelined, and we know that for the most part, lower socioeconomic classes don't invest as much. The middle class is getting squeezed into either direction, so they're not investing as much. But there's still a lot of money sidelined that is sitting there earning its 5%, 5.25%. And those people have so much money that they can just do that, and it's still a nice return for them. But sooner rather than later, that's going to change. Maybe it's later this year, maybe it's early next year. And with these new ETFs in place, BlackRock, Fidelity, they're all going to clean up because they're going to be able to hey, you got this cash. You don't want to just be earning 2.5%. Like, where's the value in that? Let's throw in this little ETF over here. And if crypto continues to get more and more legitimacy, I still think we see a lot of money move in that direction. Obviously, it's risky, but I think that we see these bigger entities positioning themselves to then be able to dump on the retail schmoes later on.
Yeah, I think, and again, that makes sense to me. My problem more so is I think that we are going to be at a pretty fast rate cut cycle, and I think that more aligns with global financial crisis that I'm very adamant on. I think we all know that's what I expect at this point. But I think what you're saying totally makes sense. They're going to want to distribute that to retail, which they dump it on them. I don't know if retail's going to have money in a few years or not. I really don't. Unless they do, cut rates all the way back to zero and they start printing money. Right now, I think with tweets like Cynthia Lummis and getting the news about the ETH ETF, and we continue to look at things like, I don't know, this chart here, which I think that we're going to find some support and bounce up this USDT dominance. We could break from this and come back down to here and we get to the Bitcoin all-time highs before we see this bounce off again and probably slingshot. I'm open to that too. I think that Bitcoin right here I would say for the next few months is going to be extremely volatile in both directions. I think it's possible that we could shoot up to like 72K, maybe even shoot for all-time highs. I think that's very possible. But the thing is also, I think that it's going to be a quick crash. And when it does crash, it's going to be very similar to FTX. So we've had a lot of things that have happened over the weekends recently, right? We've had an assassination attempt. We've had president dropping out of the race. Bitcoin and crypto is held up for the most part, extremely well. But if the tradfi market were to see a huge crisis in terms of liquidity, at least they have the weekends and, post market hours to kind of save them. I don't know if that's going to be the case for crypto. I think crypto could bottom out quicker than anything because of just markets being open so, 24/7. I think that there's a good chance that we could see, something that goes like this. Let me pull it up. You know, right now, this is a 5-way move to the upside that we've had. Again, I think Tether for that, and especially when they printed a couple billion there. But I think it could be something like this, and that gets us to all-time highs. So, maybe like 77K or something like that. And then you look back at the USDT, we lose this, find support back on this, and then we get that double tap that I think we had over here. Yeah, we had this double tap in April of 2021, and then we got to June of 2021. Went from highs to lows in Bitcoin, and then we went to low once again. I mean, high for Bitcoin, low for USDT dominance. We could be something very similar to that, where we can put in a little bit of a low, the high here, put another high in Bitcoin, and this allows plenty of room to the upside for Tether to take place over the crypto market. What will difference be in ETH ETF moves versus Bitcoin ETFs came out and started going straight up? Remains to be seen. Yeah, I really don't know how it's going to react. And again, that's why I'm choosing to stay out of the crypto market too, because this is extremely volatile and going either way right now. I mean, if you're going to short Bitcoin and you're not using mass leverage, I don't think it's going to end up being a bad place where you're going to get liquidated, right? If you're using 1 or 2x, you have a better shot of staying liquid and not getting liquidated, as opposed to someone who's probably going to be doing 10x or something like that in this area, because I think Bitcoin could go up or down by 10x, and not 10x, up or down by 10% in either direction, just given where we are right now. A lot of people still believe in the markets. A lot of retail, I do think that once rates start to get cut, there's a good chance that the price could go up. They also are betting on Trump being president. There's so many what ifs that could happen, and I kind of have to step away from the fact that it's going to go straight down only, or it's going to go straight up only. I think it's going to be both, and it's going to screw a lot of people, because again, it's holding this 60K level extremely well. If it doesn't hold that, then you're coming down to 42K or so. It's very similar to what we saw back here in December of 2021 and October 2021. Shot up, had no real resistance or support that could be built upon. So it was just, straight candles all the way up. Same thing on the way down. Did the same thing here in February of this year. Who's to say that once we finally do lose this, it's not the same exact, schematic that we got from back in the past. It's done repeatedly within this range. So key thing is just to see what holds. Is 60 going to hold? If it doesn't, down. If, we bounce off of it, then we're probably going to all-time highs. So
for Chris's question, I kind of think that it's not going to do as well as the Bitcoin ETF. ETH isn't as established. People see Bitcoin as a store of value. We've seen, and so because of that, I think there's still not as much of a clear vision for these people who invest in ETFs as to like, okay, why should I be holding ETH right now? Like, what's the point of it? And so I think that until there's a greater understanding and a more practical use of people actually seeing how they're going to use it in their day-to-day lives, I think I think the upside is kind of capped based on the ETF. Maybe I'm wrong there. And if I get proven wrong and they are wildly popular, then that is A-okay in my book, because I am just sitting here in my positions. I pretty much kind of consolidated everything down to Bitcoin, ETH, and Solana at this point. And no longer have like Link or anything like that. I just kind of got tired of shopping in that range forever. But that's just kind of where I'm at with it. And I'm ready to just kind of sit back and see how things play out. And, we're approaching football season, my favorite time of year. So I'll be balls deep in that. But I think that to me is the difference right there. Maybe I'm mistaken. And it's gonna rally hard like Bitcoin did, which would be very cool in my book.
Yeah, and again, I'll be honest with you. I don't give two shits about crypto right now. Like I'll follow this and see how the markets are trading, but I think where I stand applies to every single thing in the markets. If I'm bullish on one thing more than anything right now, I'm bullish on treasury bills and volatility. And again, I think that there is a lot of money on the sidelines, but if there's reason for that money not to re-enter the equity market, it's probably going to enter the treasury market. And that's kind of my base case right now, because rates are still, at least the percentage rates in treasuries, still relatively high. You lock in a 30 right now, you can get about 4.47%. If you want to do a 2-year, it's 4.5%. I mean, 2-year might be the deal of the century, especially if you expect the market to crash and then you want to have some capital and you're a manager that has tons of capital. You want to make, 4.5, in some cases, even the 1-year, 4.8%. Then you have plenty of money to buy the dip, because it's probably not going to, if it's a financial crisis, we're looking at something north of 40 to 50% of a retracement and everything. So I'm bullish on that stuff. But for right now, crypto, I'm just monitoring it. I have zero crypto right now. I think it's going to be very fun to watch the markets react to it, especially if we do get into that panic mode, because kind of the reason why we chose this name for the show is money never sleeps. Crypto is not going to have a moment's rest during those times. So it's going to be fun. I think it'll be cool. I don't care if it goes to all-time highs or if it dumps from here. It doesn't matter to me. But I think that regardless, it's going to be a fun journey, and I think it is going to offer plenty of opportunities when the time comes, if you're patient and don't panic into anything.
All right, that is going to wrap it up for today. We went a little long, but
Yeah, my
it
bad,
was
sorry.
it's all good. It was worth catching up and getting on track. We got a monster week ahead. I think it's going to be a lot of fun. We'll be back on Wednesday to discuss the latest data, how the markets are responding, earnings from Tesla and Google. So make sure that you hit the notification button for when we go live. Monday, Wednesday, Friday at 3 Eastern is our usual time. But thanks all for being here. If you haven't yet, like, subscribe, comment, all that stuff's appreciated. Have a great rest of your week. Stay safe. Enjoy your summer, and we'll see you next time.
Take care, everyone.